What's happening, life gainers? Trying to make those gains in your finances. In today's video, I'm going to be talking about the power of real estate and showing you guys how to work the numbers so that you can make sure you're getting a value on the real estate. And this is going to vary depending upon where you live at, but this number will give you the foundation. It's a video I did in 2017 when I bought one of my duplex properties. And at the end of this video, after you guys watch it, I'm going to tell you the secret sauce that people in real estate use on top of getting the property and renting it out to make extra money on the back end that allows you to invest in something else, keep going. And I do have a lot of friends who are in real estate that don't believe in the stock market. And then I've got my folks that believe in the stock market and don't believe in real estate. And I'm here to tell you guys, leverage both. Because one thing that real estate does that the stock market doesn't do for you is allow you to leverage your tax gains. And so what we're going to talk about on the end of the video is exactly that. So go check it out. This is when I bought it. And I bought it back then at a certain price. And I'll break down how we're going to make more money off this thing and still own it. Check out the video. What's good, YouTubers? Life Gains in the building. And you're looking at my new rental property me and my wife just bought. It's a duplex in Kernersville, North Carolina. Fall in love with the deal, not the property. I'm going to take you guys through a walkthrough of this new property we just bought, give you the data on what we did to get this property, and see if we can help you make those life gains. This is just a general walkthrough of seeing the neighborhood and what the outside of the property looks like. It's built on a brick slab for my folks that know what I'm talking about, but this is a great investment property. And if you want to learn more about this and all the other life gains, please go ahead, join my channel, subscribe, click the notification bell. I got me another piece of real estate, a good deal this time. We're going to talk about how I got it, how you can get something like this, and what I went through to get it. But first, I got to put on the +7 glasses of sexy as hell, work on skilling up my craft, giving you a better YouTube experience, something better to look at as we break down this deal. Always go to shoplifegains.com if you like any of my gear. Check out my blog. I've got a blog about how to get started in finding properties for rentals to make you some money. I got that blog up. It's really, really good. I broke it down step by step so that you guys can have something you can print and copy and look at. What you're seeing now is the walkthrough of this property I got, a duplex. How did I get it? Basically by networking. If you haven't seen my networking video, go check it out. It's in the video description. I networked with a property manager who also happens to be a real estate agent. And by doing that networking with him, before he put this property on the market, I got an email listing that he was going to put it out there, and I got a great deal for it. And basically what I did, my process of trying to find great deals is there's something called the 1% rule that I want you guys to always think about. Basically, whatever you spend, for example, if you spend $100,000 on a property, if you can get $1,000 in rent, 9 times out of 10, that property is going to be cash flow positive, meaning that you're going to be bringing in profit each and every month after you take away your expenses. With this property, I got it just like that, only instead of 1%, I got close to 2%, which means I'm going to be making my baby happy, bringing her some more money. And so when you break down my down payment, and what I'm going to be bringing back in profit, I'm making 20% on the down payment, and I have my down payment money back in 5 years. And it's a duplex. One side basically pays for everything, ladies and gentlemen. And that's how you want to invest in your real estate. You want to find something that is going to be able to kind of have some diversity with it, or it's going to be a low cost. And that's what I was able to do. Now, how am I able to get my numbers? I use a website called CRS Data. That's how I can get the background story on the comparables in the neighborhood, what things are going to sell for, the tax assessment information, and all that. You can also go to your county's website or GIS, whatever your county is, and you can get what the tax value is, which doesn't always equal the appraisal value, but it gives you a baseline. And to understand what rents are in your local community, you can use a website called rentalmeter.com. They'll give you about 20 free analysis. So you just plug in the address, the number of bedrooms this particular property had, and it'll tell you what rents are going in that community. the high, the low, and the median. And always try to put your number somewhere around the median. And if you have the opportunity to upscale it, go for it. You know, maybe you can fix up the countertops, fix up the bathroom, put some ceiling fans in there, all these things that help you charge a little bit more in rent, put a washer and dryer in there, all those things help you increase your rent. And that's what I did for all of those. And so on my income report and things that you guys want to consider when you're building your data on a property, you got to take into consideration maintenance, which is usually about 10% of what you're going to bring in a year. Maintenance is going to be a cost. If you're going to get a property manager, they're usually 10% of your monthly income, so you have to include them, and I have one of those so that I can sleep at night. Of course, the mortgage, you try to calculate what you think your credit will get you for a mortgage. Insurance on the property, you try to calculate that as well. And then the taxes. And once you calculate those numbers, see if it's going to give you profit after you've gotten all those expenses taken care of. That will be your profit margin. And so that is all I did, and I encourage you all to really take a look at real estate as a way to help uplift your financial future and liberate you so that you have a legacy to pass down to your kids, to your family, and also have peace of mind knowing that you're making passive income. Now, it's not easy all the time now, because I've had some drama with my commercial property, but once we got over that drama, it was smooth sailing and one of the best things we've ever done in our life. So I'm really encouraging you all, take a look at real estate. In some cases, you don't have to have a lot of money down. And one strategy that works well is something called house hacking, where if you can find a duplex, a threeplex, a quad, and you stay in one unit and then you lease out the other ones, that'll be a way to keep your risk down. You reduce your bills because you're living there. You got people paying the rent on the rest of them. And you can get an FHA loan, meaning you might only need 3 to 4 to 5% down to get in that property if you're willing to stay there for about 3 to 5 years. So ladies and gentlemen, I got this property around $125,000. We put down 20%, which means we already have equity. I probably put into this property since 2017, and today is November 2021. At best, $10,000, so you might as well say we got it for $135,000. We put $25,000 down, we paid $105,000 basically. And right now we only owe $85,000 on the property. So how are we leveraging to make more money? Well, when we bought the property at that rate, we was financing right around $100,000 at a 4% rate, which was great during that era. Right now, interest rates are so low, we're getting ready to refinance the property that has increased in value since we bought it. Our buying price was $125,000. Right now, if you take a look at Zillow, it's saying that the property is worth up to $188,000. And we just got it appraised again, and we're going through the process of refinancing, and our rate is going to go from 4% all the way down to 2.9%. So we'll save money on the payment. But the more important thing is, ladies and gentlemen, they're saying that the property is worth $170,000. So you do the math on that. We paid $125,000 for it, and it's now worth $170,000. Basically, we're going to get a capital appreciation of the difference from $170,000 minus $125,000. But also keep in mind, we put down 20%, and we only owe $85,000 right now. So the difference in all that we're going to get in capital appreciation, and guess what, my people? We're not paying no taxes on that money. You know why? Because it's financing. Secret sauce to how people in real estate get rich and keep getting rich and avoid paying the 15% capital gains. You hold on to a property long enough. You make investments in the property to keep it looking good and keep it going up. And then after you've had a tenant or a renter in there for about 4 to 5 years, go check the rate, see if you can get a lower rate, refinance it, but don't take it to the max. Now, they basically are saying I can get it for $175,000. I'm not going to take it that high. I'm probably going to keep it about $160,000 to $155,000. Get the money back that you put as a down payment, take the rest of it, and then go buy yourself another property and keep the system going, ladies and gentlemen. Those are the very foundations of building wealth in real estate. Now, what am I going to do with all this extra money? I'm going to probably get another property, and I'm going to take some and invest in my stocks because I manage my own account. And you guys have seen some of my videos where I am managing my own account, and I'm using my account to sell puts and making myself an extra 3 to 5% a month. So ladies and gentlemen, this video is dedicated to talking to people as if they was just getting out of high school. I'm talking to young Lamont when he was 19. Let's say you don't know what business you want to own, but you know you want to be an entrepreneur. You can definitely get there through real estate and stocks and become an entrepreneur, because managing your properties, managing your stock portfolio is definitely running a business. You just have to hunker down, put your head down, save your money. Don't worry about buying stupid stuff like Jordans or the latest brand name car, and listen to people who have done it before, been there, and gotten to a point that they have some success, but they're also willing to share with you their failures, and that's what I'm here to do. That's going to do it for this video. Don't forget to like my video. Please comment, subscribe. Get yourself that life game. If you have questions, comments, or concerns, just hit me up with a DM on IG. And if you ever want to get a one-on-one with me to understand how to do some of these things and have some confidence in doing them by yourself, I have a link in the video description where we can set up a one-on-one time. Till that next sexy as hell video, I'll see you.